All right, hello, welcome to the New York AM session stream on Tuesday, July 2021, 2026. And here we are again, back on track. So starting with the daily chart, we can see that we opened, we had a little bit of a run lower, and then price expanded higher and took out the previous day's high and tapped into the small little inefficiency here. All right, so we reached a little bit of premium on the near-term basis. That's the previous day's high that was taken, and that's the business. RTH chart perspective, premium opening range gap, upside inefficiency here. So if we go really overzealous over time, maybe going into tomorrow, this RTH gap here might be a draw on the upside. Yeah, we'll see. So this red line is the consecutive encroachment of the opening range gap for today, which is a premium gap. It's quite hard to tell where it wants to go next, to be honest. It did reach the previous day's high that I was looking for during the London Open session, and it basically delivered that. And ever since it just consolidated. Then right before the 930 pop higher, clear the radical highs buy side, then reject that. Provide gap here, sold off. Inefficiency here, that's where we are trading up into. We have a little pool of radical lows here from the London Open session. So that definitely could be something that could be attacked. But yeah, so far we are not even close to engage the consecutive encroachment of the opening range gap. Let's see, let's annotate this fair value gap here. And let's annotate this inefficiency here. Yeah, on the near term basis, sell side is still here resting, and it's in the direction of the consecutive encroachment, so that kind of makes sense initially, but yeah, we are basically almost there already. So let's see. Let's see the ES for September contract. Traded higher, consecutive encroachment of that. Weak, can't really stay above that. This one has radical lows that are very clean. That was the 5-minute inefficiency that I was looking for as a premium rate. Tapped it once here and second time at 930, then pulled back lower inside of this range. Sell side liquidity obviously rests down there. In terms of the opening range terms of the opening range gap, we have a premium opening range. Consecutive encroachment was almost breached already. Left radical lows here, so that's, yeah, I mean, ES is looking more apt to potentially consider the sell side liquidity, I would say. It seems so, at least. That's the first presented fair value gap here. So yeah, radical lows, consecutive encroachment of that. Radical lows here with that larger pool of radical lows. I kinda like that though. It looks kind of heavy. Yeah, for ES, my attention would gravitate towards the sell side here. Potentially a little bit more than Nasdaq. Nasdaq, I'm not really sure what it wants to do. Nasdaq, I wouldn't be surprised if Nasdaq would trade higher or something like that. Yes, clearly not matching the previous day's high. I don't know. I don't feel like I have a very clear idea about what either one of those want to do. That's probably like the biggest issue at the moment for me here, that I just don't know necessarily. So yeah, let's watch and see. Let's watch and see. That's the idea. 3 minutes until the 10 a.m. will start. Looks like we will poke the sell side or sell side liquidity already. And then we have the consecutive encroachment of the opening range gap for Nasdaq. And I would want to measure whether we can reach down there or not. All right, so I'm watching the sell-side liquidity to be potentially attacked off of this institutional order for entry drill. And we'll see. We still have some buy-side liquidity pools on the upside and up into the consecutive encroachment of that daily inefficiency. That's still possibly doable on the upside, I would say. So I'm not necessarily turning my head away from that. I feel like. So kind of like my attention is still gathered higher. And let's see if I can measure how far or how deep of this retracement can or will actually go. So 1 minute until the 10 a.m. we are already potentially inversing this inefficiency right there. We have still two higher ones above us, and that we maybe will be working with those. All right, interesting. Right away at the open of the gate, we are welcomed with a Bessie like this. 958. I mean 959 technically. All right, it's quickly smurfing through that through those inefficiencies here. So I'm watching if we can tap below the low and that sell side liquidity that rests there. That kind of would make sense. Relative equal high is taken into an efficiency and price turns away on the dime. Turns around though. Interesting fact, ES is not matching that low. This lower low on Nasdaq is not being matched with ES, which is quite suspect though, as ES was technically the weaker one. All right, so we have an efficiency now that's technically the first presented inefficiency after 10 a.m. is at 10:02 in form of a SIBI. I mean, this is technically like a one inefficiency though here. One bearish survival gap. Price couldn't even reach up into it and it's making a lower low. Deeper run into the sell side. Is this just showing that ES is having a little bit of relative strength on its side now? Which could make it a better long idea overall. So this inefficiency here, that's the first presented after 10 a.m. If we could close above it, I would wonder if this could act as a bullish inversion for value gap. All right, with this volatility and this leverage, that's something I could maybe think about if we would go above that first. All right, so nonetheless, ever since the 930 open, we were forming a low, taken out, then we form another low, it was taken out, then we form another low, it was taken out, and now 1, 2, 3 lower lows here. So definitely sell side has been formed and raided, formed and raided, engineered and raided, engineered and raided. That's quite interesting in itself, how Nasdaq is doing that, while ES is refusing to be making those lower lows too. So that's interesting. Yeah, we technically opened 10 a.m. here. Small little poke higher right away, sweeping relative equal highs, and then price started trading lower more aggressively, making continuous lower lows as we go. Still in the very, very early stages of the hourly candle. And now I wonder if all of this is or could become a measure of manipulation, some sort of a wick that will be taken to the upside and above this opening price to see a bullish um, to see a bullish, potentially bullish close, right? So sell side taken here and here. We have an hourly inefficiency there, so that's still quite reasonable, especially as the consecutive encroachment of the opening range gap is here, so there is still quite a bit of room. But yeah, let's see. ES is holding strong here. This busy on the hourly. Nobody's closing inside of it even. Could be attacking the buy side liquidity from the at the previous day's highs, maybe. Could definitely be stronger. Yeah, Nasdaq looks quite sus. So yeah, yes, it's really holding strong to this inefficiency here. Couldn't match anything on the downside with Nasdaq on the low, so it should be running though. If it's proper, if it's correct, it should be running higher. I'm not gonna lie, yes is looking a little bit like it will have easier time doing so instead. Well, I mean, it feels like kinda the ES will want to follow some lower lows with this type of price action, unless we just smash right on through the 10-15 candle, and then it should never look back. Okay, I will use this first presented for Varigap as a potential bullish inversion. To send it towards the buy side liquidity at the previous day's high for ES. All right, so I got filled in. And now let's see. That's the previous day's high that Nasdaq already taken. ES was staying inside this consolidation. Now I'm anticipating that ES might want to match with the buy set here and draw towards that. As we failed to reach the consecutive encroachment on the opening range gap, price traded higher. It completely was not able to match the lows with the Nasdaq, which was making lower lows altogether. And it displaced off of this inversion here above the first presented fair value gap. So I'm assuming that it could want to attack the buy side liquidity. So yeah, we are approaching the 9:30 open here, right? And the idea would be that we opened up, we traded lower, couldn't reach the consecutive encroachment of the opening range gap, SMT with the Nasdaq on the lows, bullish inversion, bullish inversion, bullish inversion, so bullish order flow below the 9:30 open to distribute that now. So I would anticipate a expansion higher towards the previous day's high, because that's where the buy side would be to unload the position, unload the idea up there, somewhere up there, or at least try to seek that and draw in that direction overall. So right now we are crossing the 9:30 price, or passing through that 9:30 price to the upside, and that's where or when I would like to see a measure of expansion happening, trading through that high, initial high at 9:30, and then expanding higher, basically towards the previous day's high. That's kind of what I would like to see. It doesn't necessarily need to reach that high specifically during this session, but yeah, drawing towards that would be nice. Nasdaq showing that it made a little bit of a turnaround here too. I kind of like that. And with all the relative strength on the side of ES, right? That would kind of make sense to see it displace higher, but that's theory. What is going to happen, that remains to be seen, I suppose. All right, so we got that little bit of the expansion through. So now I don't want to see any rejections though. I just want to see it follow through and basically have easy time expanding outside of that red shaded box, which is a 5-minute bearish survival gap / a CB. I would like to go above that. So we'll see how that goes, unless this is the high from the previous day's session. Best case scenario, kinda. But yeah, the probabilities are greater in my favor if we could overcome this CB first, right? So that's kind of like one step at the time. Here is the line in the sun for the first partial. That was 50% between my target and the entry. So that's where I'll be inclined to take something off as a partial. So far so good. We are expanding higher. I want to see that continuous expansion though to kick in, basically. Fair enough. Yo, Ed, thanks for tuning in though. And see you. Be safe on the road, by the way. So, yeah, I mean, I feel like at this point, as we are forming this high here, it wouldn't be too bad to look to be offset distributing above the short-term highs that it might want to form if it allows a run above them. So let's see though. So now we are technically at the 930 high, which is technically a low, a high, a lower low. It's kind of like a breaker that is touching too. I mean, I would love to see it poke higher above the short-term high. Well, I don't like the failure here though. That's a little bit problematic. There is a 5-minute inefficiency, 5-minute fair value gap that I would love to see a reaction out of. So as long as we are not closing below this, I think we should be good in terms of potentially aiming for higher. But the moment we close below this candle's high, so meaning basically close below this 5-minute inefficiency on a 5-minute basis, then I think it's no longer a salient idea to pursue. Because yeah, if it's really still bullish, if it's strong, if it's in a rush to get somewhere higher, it will not want to waste time inside of this inefficiency. And first of all, it will not want to close it in completely. And second of all, it will not want to spend too much time inside of it. So that's kind of like what I'm watching right now. And I'm expecting, or I'm willing to see a measure of reaction that will continue going higher. If we devour this to the downside, close below, that's not good. That's very not good. We are already trading below it here, so that's not what I want to see. And that may cause or may result in a manual close, but let's see though. Let's see. 930 opening price recapitalized here within this inefficiency on 5-minute. Let's see how this one closes though. Fifteen more seconds. We are around the low of this inefficiency. Not a fan of that. We are closing inside of it though, but that looks quite like a weak little close. Yeah, I mean, I feel like I could be closing that even here though. To just save the stop potentially. Using this first presentation as the line in the sand though. So yeah, I mean, if this is kind of like a deep retracement lower here, then I really don't want to breach this first presented fair value gap. As far as this, I feel like it's like, you know, permissible in a sense, but it needs to react higher from it though. And being really strict about it is key now. So let's see. Initial reaction, very good. But let's see how and or if it can continue on pushing higher though. So the 5-minute BC that we went below, it should offer no resistance. And it should have easy time going through that. I like the displacement here higher, that's good. Off of the first presentation, that's good. So now this down candle here is a change in the state of delivery, technically. It also lays over top the 930 open. And I love how bold body candle that this is. So no closing price below mean threshold of this 1041 candle is allowed. If we see a closing price below that, I'm probably in some trouble. So then I would be glad to close, I think, and save the stop. Until that happens, looking for higher prices for the expansion. For the win. I like the 1043 busy to remain open if possible. Nasdaq is pushing, so ES should also. All right, so 2.5 minutes until the 10:50 to 11:10 macro. So I would like to see it repel price higher by then. Line in the sand is this mean threshold of this down candle here. We can touch into it, but we should not close below it. Any close below it, I'm out. Anything else, I'm holding for higher prices. I like this displacement here, institutional or referential drill. Displacement. So let's see if we can go one more time above it. That would be a reasonable area for a partial, I think. All right, so now this week on this candle here, I want to, as quickly as possible, to see a body laid above that. I don't like this though, but let's see. I'm submitting to the idea still. Well, that's a little bit problematic here. Small little inefficiency here that I'm watching too. The price is trading inside of. Well, I mean, that's not looking that well. I mean, maybe as long as this deal holds price with this potential order block here and we are not closing below it, that's good. But at the same time, I would expect a little bit more of a expansion, a little bit more of a speed and strength to the upside. We don't necessarily see that yet, which is I don't want to say annoying, but a little bit problematic. And overall, because it's the 1050 to 1110 macro, I would expect a price run in my favor that's solid, that's moving, right? So I guess that's like the last chance for it to do so. If it will fail or be failing during this time, then that's kind of like a sign that I probably should get out. This is the order block. That's where we traded into during macro. So I want immediate response out of this. So it's time and price being met. It should resulted with a expansion away from that level. Right, so now expansion is really due. It took some relatively low sell side bullish order block within a busy low high discount 5-minute bullish for value gap macro. What else do you want, right? So if it's good, it should run from here And yeah, I mean that's probably where I could trim the stop loss to break even. Because yeah, I wouldn't want to see it turn around here against me. If it does, then it's probably not good. So stop loss is moved to just below the mean threshold of this order block. And yeah, we'll see how it will go now. So now the 1056 candle should act as a proportion candle here, because that was the order block. This one traded into the order block and formed an order block itself, which technically is a proportion block, which has the characteristic that if price comes down into it, first of all, it should never breach the mean threshold. Second of all, it should be or should offer explosive price runs afterwards. After it returns to it, the price usually gets explosive and offer expansions. So in this case, it lines very well with that run higher towards the previous day's high, right? So let's see, we rolled over into the 11 o'clock. So yeah, I will be glad to measure this candle's range for mean threshold. Mean threshold is right there. I don't want to see that being breached. It can touch it, but it cannot close below it. Okay, that's the touch. That's a dive. I don't like that already. Right, I mean, it closed below the mean threshold of the proportion candle here, which means that I will close that right there. Because I feel like the longer it takes around this area here, the more iffy, the more 50-50 it becomes, though. So I guess I tried, but this just doesn't or didn't want it to show me that expansion that I was looking for. They are really closing below the mean threshold of the proportion candle here. That was my early red flag. Then it right away closed below the mean threshold of this order block, so I would be out here anyway with a break-even stop. So at least I covered a little bit with this trade, but yeah. Interesting though. Losing ground in here may suggest these lows aren't safe. But that's already past the 11 o'clock, so I'm out anyway. Let me see the balance for today. 64.5 back up. Not much, but surely better than a loss. And adds a little bit of, adds a little bit to the bottom line and mitigates a little bit of the drawdown that I'm currently suffering. But yeah, regardless, that's it for today. I'll be back tomorrow with more price action. So thanks for watching though. Kudos to you guys and see you next time. Be safe. See ya, yo wet.